Crypto Chronicles, Episode 29, dive into the latest crypto buzz. What's up everybody, it's Ben Dingle, and welcome back to the show where we break down the hottest topics in the crypto sphere. From Bitcoin's price movements to groundbreaking regulatory developments, we've got you covered. Now, before we jump in, I want to hear from you. How do you see global regulations shaping the future of cryptocurrency? Drop your thoughts in the comments below. Let's dive right into it. It's interesting to see how market sentiment can shift so quickly. 1 minute, everyone's riding the wave of optimism, and the next, they're bracing for a potential downturn. But that's the nature of any market, right? Volatility is part of the game. Crypto trader. Some believe that Bitcoin is simply undergoing a natural correction after a period of significant growth. They argue that the long-term prospects for Bitcoin remain strong and that any price dips are just temporary blips on the radar. They point to factors like increasing institutional adoption and the growing awareness of cryptocurrencies as reasons to be bullish on Bitcoin's future. Ultimately, the decision of whether or not to buy the dip is a personal one. It's essential to conduct thorough research, consider your risk tolerance, and maybe even chat with a financial advisor before making any investment decisions. Now, let's shift gears and talk about a cryptocurrency that's been absolutely crushing it lately. LayerZero's Zero token. This thing has been on fire, surging a whopping 52% in just 7 days. That's the kind of growth that gets crypto enthusiasts fired up. So, what's fueling this impressive performance? Financial analyst. Well, a couple of things are at play here. First, LayerZero recently announced some major strategic partnerships that have gotten investors excited about the project's potential. These partnerships are opening up new avenues for growth and adoption, which is always a good sign in the crypto world. Second, there's a lot of buzz around LayerZero's technology itself. They're working on some cutting-edge stuff in the blockchain interoperability space, which is a fancy way of saying they're trying to make it easier for different blockchains to talk to each other. This is a huge deal because right now, the crypto world is kind of like a bunch of separate islands. LayerZero is building bridges between these islands, and that's got the potential to revolutionize how we use and interact with cryptocurrencies. Another factor contributing to the rise is the strong community engagement. Social media platforms are buzzing with discussions about LayerZero, and the team has been actively participating in community events and AMAs. Their future roadmap looks promising, with several key milestones set to be achieved in the coming months. All these factors combined have boosted investor confidence, making Zero one of the standout performers in the market right now. If they continue on this trajectory, LayerZero could very well become a major player in the crypto space. So, keep an eye on this one. The future looks bright for LayerZero and its Zero token. Now, let's talk about something that's not so positive. The CFTC's recent victory against some crypto fund operators. This case has garnered significant attention and has become a pivotal moment in the ongoing battle between regulators and the crypto industry. This case has sent shockwaves through the crypto community, and it has major implications for the future of crypto regulation. Many in the community are now questioning the extent of regulatory oversight and what it means for the future of their investments. In a nutshell, the CFTC accused these fund operators of running a fraudulent scheme that defrauded investors out of millions of dollars. The details of the case revealed a complex web of deceit that left many investors in financial ruin. The court ultimately sided with the CFTC, delivering a major blow to the defendants and sending a clear message that regulators are not messing around when it comes to cracking down on illegal activity in the crypto space. This ruling is a stark reminder that the crypto industry is not beyond the reach of the law. Regulatory expert. First, it shows that regulators are becoming increasingly sophisticated in their understanding of cryptocurrencies and how they can be used for illicit purposes. This growing expertise is crucial for effective regulation. They're not falling for the same old tricks, and they're developing new strategies to combat crypto-related crime. This proactive approach is essential for staying ahead of those who seek to exploit the system. This case is likely to embolden regulators to pursue more aggressive enforcement actions against other bad actors in the crypto industry. The success of this case could lead to a wave of similar actions in the near future. The CFTC's victory sets a precedent that could make it easier for them to go after other individuals or companies suspected of violating securities laws or engaging in fraudulent activities. This precedent is a powerful tool in the fight against financial crime. Regulation is necessary to protect investors and ensure the long-term health of the crypto market. Without it, the market could become a breeding ground for fraud and instability, ultimately harming everyone involved. In some more positive news, DWF Labs recently announced the launch of a new $20 million fund specifically aimed at supporting innovative blockchain projects in China.
This is a big deal, guys. China has always been a major player in the tech world, and now they're setting their sights on becoming a global leader in the blockchain and cryptocurrency space.
This new fund, called the Cloudbreak Fund, is going to provide much-needed capital to promising Chinese startups working on everything from decentralized finance to supply chain management.
It's going to help these companies develop their technologies, expand their teams, and bring their products to market.
But this fund is about more than just money. DWF Labs is also providing mentorship and guidance to these startups, helping them navigate the often complex world of blockchain technology and entrepreneurship.
They're connecting them with investors, advisors, and potential partners, giving them the best possible chance of success.
The Cloudbreak Fund is set to make a significant impact on the Chinese crypto landscape. Chapter 5. Russian central bank suggests using crypto to counter Western sanctions. Alright, let's talk geopolitics for a minute. The Russian central bank recently made headlines by suggesting that the country could use cryptocurrencies to help counter those Western sanctions that have been imposed on them. Now, this is a big deal, guys. It shows how cryptocurrencies are increasingly being viewed as a tool of economic statecraft. Think about it, traditional financial systems are controlled by governments and financial institutions. If a country gets hit with sanctions, those institutions can effectively cut them off from the global economy. But cryptocurrencies, they operate on decentralized networks that are much harder to control. So, Russia is exploring the possibility of using cryptocurrencies to bypass those sanctions and continue to engage in international trade. They could potentially use crypto to pay for goods and services from countries that are still willing to do business with them. It's a sign of the times, guys. Cryptocurrencies are changing the game when it comes to global finance and geopolitics. Chapter 6, EU-US Financial Forum highlights cooperation on crypto regulation. In a move that surprised absolutely no one, the EU and the US are teaming up to tackle the Wild West of crypto regulations. This is something that's been a long time coming. You see, the lack of clear and consistent regulations has been a major roadblock for the mainstream adoption of cryptocurrencies. Businesses and investors have been hesitant to fully embrace crypto because they don't know what the rules are or how they might change.
This collaboration between the EU and the US is a big step toward creating a more predictable and stable regulatory environment for cryptocurrencies. The goal is to come up with a common set of rules that can be applied globally.
It shows that regulators around the world are recognizing the growing importance of cryptocurrencies and the need for international cooperation to address the unique challenges they pose. Chapter 7. Chinese banks bolster digital yuan security to fight money laundering. Now, let's shift our focus to China, where the government is stepping up its efforts to ensure the security of its central bank digital currency, the digital yuan. They're taking a proactive approach to combating money laundering and other financial crimes, and it's fascinating to see how they're leveraging technology to do it. This initiative is part of a broader strategy to modernize the financial system and enhance the integrity of financial transactions. The digital yuan, also known as the ECNY, is China's answer to the growing popularity of cryptocurrencies. Unlike Bitcoin and other decentralized digital currencies, the ECNY is designed to be a stable and secure digital representation of the national currency. It's a digital version of their national currency, issued and backed by the People's Bank of China. This backing ensures that the digital yuan maintains its value and trust among users. And unlike decentralized cryptocurrencies like Bitcoin, the digital yuan is firmly under the control of the Chinese government. This centralized control allows for greater oversight and regulation, which is crucial for preventing illicit activities. the Chinese government is investing heavily in security measures for the digital yuan. These investments are aimed at creating a robust and secure digital currency ecosystem. They're using advanced technologies like artificial intelligence and big data analytics to track transactions, identify suspicious activity, and prevent money laundering. These technologies enable real-time monitoring and quick response to potential threats. This means that anyone who wants to use the digital yuan will need to verify their identity, making it much harder for criminals to operate anonymously. By ensuring that all users are properly identified, the system adds an extra layer of security and trust. That's it for this episode of Crypto Chronicles. We covered a ton of ground today, from Bitcoin's price swings to global regulatory developments. Remember, it's crucial to stay informed and approach the crypto market with a healthy dose of caution. As always, I'm not a financial advisor, and this is not financial advice. Do your own research, understand the risks, and never invest more than you can afford to lose. Until next time, take care and stay informed.